your chart looks like this, you've already lost. Most traders are drawing trend lines that lie to them. I used to do it too, and I blew accounts thinking I was following the trend. But here is the truth. You're not using trend lines wrong because you can't draw. You're using them wrong because you're using them emotionally. This video will show you what that means and how to stop. Hey there, welcome again to my channel. If you're new here, I'm Kojak's Pro, a trader, and I've been at this forex game for over 3.5 years. Let's get into some practical stuff today on charts. So we're going to talk about trend lines and how to plot your trend lines properly, and using trend lines the proper way that professionals use them in order to make real money from the market and declutter themselves of all the biases that are inherent in a trader's mind whilst using the tool. Right before I became very savvy at chart work as a professional trader, I used to do the opposite, way more the opposite when I was a newbie trader. I was plotting my trend lines the wrong way. So I started out by joining trend lines, drawing points that appealed to me rather than seeing it from the market's perspective. And also, I was using trend lines in an isolated fashion, not combining it with other basic tools to make trading decisions. As a matter of fact, I was using trend lines as my entry criteria, and that's wrong. And I'll show you that at the end of this video, why you shouldn't use trend lines solely for entry purposes. You should use it with confluence of other factors in order to make good trading decisions. So without wasting so much time, let's get into the video. But before we do that, subscribe to the channel if you're new. And if you're a returning viewer and you've not done so, do that now. Now, let's get into the video. Why are your trend lines failing you? Let's answer that by going into our charts to show you exactly why that happens. When drawing your trend lines, if you're forcing lines to fit your bias, not the market's perspective or bias, that trend line is going to fail. If you adjust trend lines to make your setup work in order to take a trade, that's not real confidence. That's actually fake confidence. That trend line is not going to work. If you draw trend lines from points of hope, not structure, that trend line is going to fail. And as I said earlier on, if you're treating your trend lines as entry signals, not structure bias or like a structure guide, you are more than likely to fail in that trade, and series of trades come as well. Now, having said that, let me show you how to actually draw a trend line and then cut out the noise of doing the wrong things so that your chart can be better and your trading decisions can be spot on once your trend lines are in place. So this now is a chart on GBP USD, and I'm going to be quickly showing you how to spot a good trend line drawing opportunity. Now, you only have to draw your trend lines from one obvious swing to the next. Now, there are two things that can happen. Once you're about drawing your trend line, you might encounter challenges such as the trend being very steep for you to actually draw a structurally confident trend line. In this case now, I'm going to show you an example of that. Just bear with me there. This is GBP USD, and you should only draw your trend lines from most obvious points or swings. So this is an obvious swing. Now, this is an obvious swing that is made up of clusters. Sometimes your trend line doesn't actually need to come from one particular candle or, from one particular candle. It can come for a series of reactions around a particular point. But most especially, what you should be careful of when drawing your trend line is that you use only the wicks. Use only the wicks of the candles to draw the trend line. Even in the case where the candle doesn't actually have a wick, but there is a cluster of reactions around there, that's fine. You can use the most outstanding candle there for your first point. So, and it's just a matter of joining one structural point to the next. So in this case now, I've just used my ellipse tool to circle out a series of reactions around that point. Now I want to find the second point, because for you to have a valid trend line, it should be made up of 2 points. The first one is the first swing, the second one is the second swing. Then, after you've joined a line across the two of them, you have a trend line. Now, in this case, I've drawn the first point or the first swing. Let's see, I'll find a second point. Now, this is going to be a second point here, or second swing. Why is this so? Because if you look in between, you can see that you're not going to find any obvious swing to draw a trend line. So if we're going down, if we're in a downtrend, you find the most obvious swing high and the next swing high, which is going to be at the lower point. So in this case now, this is what it is. All I need to do now is to pick up my trend line tool and join it like so. So I'll find the most obvious point here. I'm just going to draw this first of all, then I'll put it together so you can see. Then join it. Easy. This is how I love to draw my trend lines. Now this trend line has been drawn and it's quite authentic. I didn't draw trend lines this way, mind you. I didn't have to start trying to catch this second one because that was only going to make your trend line steep. And I told you earlier on that beware of steep trend lines. Steep trend lines will only lead you into trouble. Another thing you need to also understand here is, in order to draw trend lines, you need to be aware of your high time frame bias. Now, ideally, you should be trading in the direction of your high time frame bias. So if you trade the lower time frames for your entries and use the higher time frames, such as the daily, for your trend bias or confirmation, that's fine. If you use the higher time frames like the monthly for your high time frame bias, and then you come down to the dailies and the 4-hourlies for your entries, that's fine as well. All I'm saying is that ensure that the trend line you're drawing is helping you make a decision to trade in the direction of the overall trend or for your overall bias. Now I've drawn the first example. Now you can see I'm just going to watch this trend line go into the future so that you can understand how trend lines actually work. Now, after I've done the first and the second point like so, you see that I didn't actually need to bother about this last. I didn't actually need to bother about this last one. And I'm not saying I'm not going to bother about it now. I will actually factor it just in the near future, but not immediately. The only time I will look towards updating this trend line is if this has happened. So we have had the first and the second point. And this third point previously created a low right here. So now this is a low that has been created right here. Now I'll only be looking towards updating this trend line if this low is broken. So this low was created before this current swing high again. Now, in order for me to change the symmetry of this trend line now that had only just factored in the first point here and the second point here, in order to factor in this third point, I will have to only wait for this low to be taken off. Now, once this low is taken off like so, and price has broken below it, then I'll feel confident to say this first trend line is no more capturing price in its updated form. And in order to do that, I'll need to update my trend line. So what all I'll just do now is to take it away from the second point and let it touch the third point, like so. So now you can see now that the trend line only factors in the first point there and then the second point here. So it's only factors in this first point. So I'm just going to use my text to see how I can get this. So let's use a text too for this. So I'll use here as the first point, and then I just clone it, and then I'll use here as the second point now. So we've got 2 points now, and that's how to draw your trend lines. Now I'm going to be using another example to show this. Now gold for a while has been clear-cut bullish. As a matter of fact, anybody thinking of selling gold now, you are going to be putting yourself at a great disadvantage because you don't have the trends to your favor. But you need to ensure that however you want to go about your gold trades, and everyone's inclination for a while now has been bullish towards gold. If you're going to flip your bias for gold, that means you are combining not just only trend lines, you're also combining some other essential tools at your disposal as a professional to be able to flip your bias on gold. But I'm not saying that you should do that now, but I'm just going to use gold to point out what I'm talking about. Now, gold for a while now has been bullish. How do you draw this trend line? So you can choose to draw this like this is a swing point. You can say you can draw this trend line like so. It captures price quite easily this way, because in this case now, watch what happened. I got to the, just going to put it like this. So this is the first point. Just going to put this down. This is the first point. So this is point 1. I'm just going to take it closer so you can see where our reactions are. that a region of cluster can be classified as one swing. So it doesn't matter how many small wicks touch there. As far as they were within the same region, it's classified as one swing. So this is one swing. Now the next swing is this. Actually, I'm going to take this out so I can show you guys what I meant about updating your trend lines. So when we use the bar replay tool like so, you can see that initially this was what the trend line looked like. The trend line only factored in this swing. So this was swing 2 before. So this was swing 2 before. I'm just going to take it off. Now this was swing 2 before because we've had 2 touches. Now when I told you about updating your trend lines, if this area is broken like so, which was what happened here, that is only when I looked towards updating my trend line. So after this region right here, after this high was taken off with this bullish daily candle, all I now have to do is to ensure that all I have to do is to wait for the next swing that is going to propel this trade to the upside. It's not yet materialized in this case, but when it does so, you understand what I mean. So let's just run into the future and see. Now you can see exactly that the trade came here right to that region, that same region, which I used as the breakout point or the last swing high. After market broke above it, it still came back to retest it right about here and created a reversal candlestick pattern. So it created a reversal candlestick pattern right here. You can see the reversal candlestick pattern right there, right on the zone, and also that constituted the third touch of that trend line. And then that propelled the market to the upside. So once you draw your trend line, just make sure that you leave it to run. Watch as how price reacts around it in the subsequent points or swings. If you need to update it, you update it. Like in this case now, there's really no need to update it, but I can be very pinpoint and say, okay, I need to ensure that it touches the right swing right there. And that's fine. In this case now, I can now come here. I can now say here it's now 0.2. So you get the gist there. I can now say this is 0.2. Now you've gotten your first swing, you've gotten your second swing. Now the market has gone all the way up. Now let's see whether this market is going to give us better swings for 0.3 and 0.4, or in which case other swings that will make us want to update our trend line on gold. And if it doesn't do that, you will see that sometimes trend lines can actually make sense when you draw them using the most obvious swings. Sometimes they don't make sense when they are too linear. And whenever you are having a linear trend line, please do not rely on them. Wait for price to actually use zones, use market structure to determine your continuity for that particular bias or trend. So let's just watch on this trade on gold. So it actually did come to very close to it. It didn't touch it, but it came close to our trend line right here. But it didn't touch the trend, but it came close to our trend line, and the market continued to go up. So let's just watch and see. Now you can see now that the market, this is the current position for gold. So I'm just going to take out all this. Now this is the current position for gold. Now you've seen that we've drawn a very good trend line that has showed or seen gold to the upside for quite a while now. Now we had 2 touches, which was the first and the second touch, like you can see there. And now the market failed to break this high. That's how you combine. This is how you go about your analysis as a pro trader. You are using different tools here, suppose. And now I've talked about trend line. Now I'm now talking about market structure. Now you've seen that the market came to this high right here. Market made this high right here. Actually, I'm just going to use a tool for that. So the market made this high right here and has failed to break it. You put this to, even when you put this too close to the borders of the candles, you can see that the market made 3 attempts to break this. The first one was the first attempt which he made here, and he wicked below it. This was the second attempt. It just didn't break above the resistance level. It pulled price back down close to this trend line. Now it came for a third time and still didn't break and hasn't broken it. And in this case, last week for gold closed with a break of this trend line. Now gold has made trade rejections at the previous resistance and has chosen not to break it actually. What do we say about gold? We're saying that gold is actually this. If you look at this is a ranging market. Now, whenever this range is taken off, that is when we'll be confident to trade gold to the downside. But don't just jump on a gold trade yet for a down trade, even if the trend line has been taken off, because like I told you, you should only be using your trend line tools in conjunction with market structure and some other tools as well. You don't just blindly jump on trades. Why? Because if you look at this is the last swing low, swing high. This is technically a swing low, and the market came back here. If you are looking at flipping your bias on gold, I'm just giving you a little sneak peek about gold. If you want to flip your bias now from bullish to bearish on gold, all you need to do is to wait for this structure here to be broken. So I'm just going to mark it out with. So just wait for gold to take this out, to take this level out. Now once gold, I'm just going to mark it with. Now once gold has taken this level out in this fashion, so gold just needs to break this. Once gold breaks this level, the next target will be here, which was the previous structural level. Now if gold breaks this level as well, then the next level will be here as well, structure 1. Easy. That's how you go about trading and using trend lines to draw. Hopefully that has showed you how to use your trend lines. So this is a recap to actually use your trend lines like a professional. Only draw from obvious swing points. Use them to mark pressure zones, not perfect lines. Never enter because of a trend line. Confirm with structure. A bad trend line is too steep, too forced, and too recent. A good trend line, on the other hand, comes from the higher time frames, has clean reactions, and not relied on emotionally. Think of trend lines like this instead. Trend lines aren't magic. They are scaffolding. They are just a way to visualize directional pressure. They shouldn't be used to predict. They should be used to plan. Now, this video is too short to actually go through everything that has to do with drawing trend lines properly. And I've decided to do this in my subsequent videos. So eventually, I will come back to the topic of trend lines, in which case I'm going to go in deeper and give you better updates on how to draw your trend lines properly. Watch out for that when it comes. And in order to do that, subscribe to the channel so that you see all these handy insights on trading that is going to help you as in your overall journey as a trader. So if you've not yet subscribed now, click that subscribe button, like, comment. I'm ready to see your comments and I'll be very fit to join and answer them. See you in my next video.